Hello guys, welcome to my YouTube channel. My name is Kingston, and in today's video I'm going to be explaining how I determine my directional bias starting from the higher time frame toward the lower time frame. Okay, so let's quickly dive in. So I'll be using Europe US as an example to this explanation. Okay, how we can determine your bias from daily to 4 hours, to M30 or M15 to in3. Okay, so I use 3 time frame for my daily to determine the direction of the market, which is weekly. I don't check weekly that much then, but daily time frame and 4 hours to determine the direction of the market. Then 1 hour, 2 hours, or maybe 30 minutes for structure and in3. Okay, so what is this directional bias all about? Directional bias has to be simple. We all complicated it. Directional bias is just like the same analysis. Time is price action is fractal. The same thing that is happening on the higher time frame is also happening on the lower time frame. The difference is just the speed at which it's happening. For example, for a one candle now, a daily candle to form, it will take 24 hours. But for a one candle to form of 15 minutes, it will just take only 15 minutes. So you see, so we have many opportunities inside one daily candle, but we have less opportunities inside one 15 minutes candle. Okay, so I trade structure, liquidity, POI. Okay, in this channel I also draw video explaining each and every one of those concepts: structure, inducement, POI. Just make sure you subscribe to the channel and stick with me. But today I want to explain directional bias. Okay, because I understand that that's where people find it very difficult in this trading of a thing to determine the direction of the market. So on this part of what our order block here, okay, after the order block, pay attention. You can see that what when markets break this candle here, pay attention. Let me zoom my chart a little bit. When price break this structure to the downside, it didn't break this structure with this particular candle. It broke the structure with this candle here. After breaking that structure with this candle, it made a pullback, which is what our inducement. Okay, if you are familiar with structure, liquidity, POI, you will know that okay, this is our single candle what inducement after what the break of structure. Okay, so at this point the price mitigate this particular order block. We are expecting what bearish price move to the downside. And where is our target for the price move? We have this what open close, and on the H4 time frame here, that particular open close here is our what breaker block on the what H4. So from here now to this zone here, we are meant to be looking for what sell. We are meant to be looking for what sell, looking for sell till price get to this level. No matter what price is doing, no matter what is happening on the lower time frame, we focus on what sell till market does a higher time frame change in market structure, which is what MSS. But for the fact that we are moving to the downside, we keep on looking for what continuation to the downside. And what are we looking for? I will explain what you look for in the continuation to the downside. So now when price get to this particular level, we move down to our what 1 hour time frame. On our 1 hour time frame here, what are we looking for? We're looking for what an MSS to the downside. Okay, price break this structure to the downside here. After breaking this structure to the downside here, the pullback that is meant to create the inducement push to the upside and take out the high, so no entry yet. Okay, then price was to break another structure to the downside, made a pullback, but this particular pullback to the downside didn't break this structure. Rather, it didn't break this structure, it was just weak. All right, we see her patiently wait for what a proper break of structure. But at this point now, you can see that you have a bias. We are looking for what entry. You understand? There's a difference. You have a bias, you're looking for what entry. Okay, so now you can see that after price what break this structure to the downside here, price also took what this low here to the downside, which is what our what double break of structure. Double break of structure is actually a very cheat code for continuation of trend. If you want to keep, if you're trading a continuation of trend, if you make use of a double break of structure, it's hardly for you to hit SL. You keep on getting a good entry. Instead of using a single break of structure, using a double break of structure will give you high probability and you'll be taking quality trades. All right, so after this double break of structure to the downside here, we have what this particular candle pullback here. This particular candle pullback here, which acts as what our inducement. After that particular candle pullback to our inducement, we have what our breaker block, which is what the last bearish candle in this particular break of structure, which is what this. We'll mark it out. You can see without even going to any other lower time frame here, we have our first entry here. keeping our stop loss a bit above our Excel, maybe targeting this what low, okay, because probably we are like day traders, so we are not aiming for much RR. It depends on your risk to reward. For me personally, I used to target 8 hour, then 10 hour minimum, no, 5 hour minimum and 8 hour maximum. Okay, you can see with this now we have taken our first trade for the week. So market keep on. What are you looking for next? You are looking for what? Another double break of structure to the downside. Okay, so with the same bias now, you are not going to, okay, for example, because of price did something like this, you go and be marking here, you go and be marking this particular zone as your what, as your what order block for the buy. No, we are in a bearish time. It doesn't mean, for example, now look at this particular setup here. We have a break of structure here and we have an inducement here, okay, and we have what, another block here, or a breaker block. On a norms, if we are in a bullish trend, this is a good setup for buy, but because of what, the trend is not on our side, that's why this setup what failed. It did a good small reaction, then violate it. All right, but if you are working with the trend, no matter how good the opposite POI is, market is likely to violate it because of what, is not in the direction with the trend. Okay, so let's keep on going. On this particular move here, you can see that what, price what, break this structure to the downside. Price break this structure to the downside here. We have this break of structure to the downside. We have what, we have this break of structure to the downside. At this point now, we have determined our what, double break of structure to the downside. Then wait for what, our inducement, which is the first pullback here. You can see we have our inducement here. Above that inducement, what is the PDF order block here, which is what, the POI closer to what, the inducement. We take our second trade here. We take our second trade here, targeting what, the next draw on liquidity, which is what, this low. Okay, you can see now with the fact that you understand the bias, you have taken one trade here 8 hour, second trade here 9 hour. Let's say for example, if you keep on holding this trade, it move massively, but let me just keep it here. All right, so moving down to the downside here, you can see that price what, broke another structure to the downside. Okay, we have this low, also we have this low here. Okay, I think this particular trade, I took this trade, I posted it on my X. Okay, so after this particular trade to the downside, price what, broke this structure to the downside here, and also break this structure here to the downside here, which is what, our what, double break of structure. And after breaking this structure to the downside, we have our what, first pullback. We can use this as our inducement, and we can also use this as our what, inducement. Okay, then we have what, there's a rule that guides, that we have in let's say there's a rule about picking a point of interest, which states that you have to pick a point of interest that is closer to what, your inducement. We have this inducement here, we have this other block, we have this breaker block here. Which of these POI is closer to our inducement? We have what, this what, other block here, which is what, closer to our inducement. Don't worry, on this channel I will explain how to pick what, breaker block, and how to pick your what, other block. Just subscribe to the channel and stay tuned. Okay, and I'll also explain structure POI on this channel. Okay, so we have what, this our particular breaker block that price what, mitigate. Price mitigate this other block here. Price mitigate this other block and push what, to the downside. Right, and move to the downside. Then at this point now, you can see that price have mitigated our what, higher time frame POI that we are targeting. And from here to here, they say less is more in this trading of a thing. You can see now with this whole move now, you only took 1, 2, 3 quality trade without gambling or anything. You understand? At this point now, price have mitigated this particular POI. You don't go ahead and start looking for another sell, or maybe maybe start jumping into buy. No, you wait for what, a market structure shift, which is used for what, our change when market start changing trends. Okay, let's move to 30 minutes. Okay, on this 30 minutes here, price tap into what, that particular higher time frame, made a high, made a low, then price what, break structure, which is what, our what, market structure shift to the upside. Okay, after our market make that market structure shift to the upside, we have what, our this particular pullback to the downside. And looking closely here, you can see we have what 2 POY here, we have our breaker block here, and we have our other block here. Alright, so now which of them is closer to the inducement? This particular 2 POY now, which of them is closer to what? To the inducement. Come in. You can see fully well that the other block is way far from the inducement, from closer to the inducement. The other block is way far to the inducement, or rather we have what? This breaker block that is closer to the inducement. Then we'll take our what? First entry, which is what? For buy. You can see now from the higher time frame, you have determined what? The direction of the market. And now you're not just gambling. All this thing that is happening here, you will not just go and be marking. You know that price have mitigated a H4 POY, a H4 breaker block. What are you looking for next? You are looking for what? Market structure shift. Okay? Understand, for change of trend, we will make use of market structure shift. For continuation of trend, we will make use of double break of structure. Let me repeat it again. For change of trend, we will make use of market structure shift. For continuation of trend, we will make use of break in market structure. Okay, so now at this point now we are meant to be looking for what? Buy. So we took this buy to the upside. So let's say for example now on this particular day, how do we go inside the market? What are we looking for? We are looking for what? Double break of structure. Market made this low, went up, but it didn't break what? This structure. It pulled down to the downside, made another high, it didn't break any structure, it pulled down to the downside. Okay, at this point now, some people will go and mark this particular order block for sell. Okay, but you are what? You are against the trend. Have it in mind that price will always violate your what? Your POY, or maybe give you small profit then take you out. Alright, so now at this point here, we have what? Price put down to this low. We are still patiently waiting for what? Double break of structure. You can see price what? Made this move to the upside. Then we have what? A break of structure to the upside. Then we have another what? Break of structure to the upside, confirming what? Our what? Double break of structure. So we have what? On this particular trade now, on this particular, you can see this candle. This is the candle that was weak above it. We have this candle that was break above it. Then we move down towards 15 minutes. There's no clear inducement on this time frame, but on this particular time frame, we have a clear what? Inducement here. Sorry guys, we have a clear inducement here. This is our inducement here, and our entry. Our entry come from like the 30 minutes breaker block here, which is what? This particular breaker block here, or this particular one here. All right. Then our entry will come from, we'll take our trade from somewhere here. Then our XL stays at the low of this other block, because have it in mind that price have the right to retrace towards this particular other block and push to the other side. Let your XL cover for this, so the market will not surprise you. Okay, then we can extend our XL TP to the upside. See, targeting 9R. All right. So now with this mindset, now you can see that we understand the direction of the market, and we'll keep on focusing on those things till market gets what? Another higher time frame POY. Okay, let's say for example now on this move here, let's go to a 15 minutes time frame. On this 15 minutes, I see that on this particular trend, you can see that what? Price break past this high here, and also break past this high here. But the last high was not too clean. That was a sweep. Okay, that was a sweep. But pay attention, you can see that because we are in a line with the directional bias, this is what as our inducement, because that's a single candle inducement. Then we can now pick our POY from the what? The POY that is close to inducement. We can actually participate in this trade, riding this trend what? Upward. Okay, you can see our XL here. You can see this is like 5R. Alright, because of what? We are in the line with the trend. Okay, we have cut this trade and we have cut this trade. Understand, the same analysis you are doing in, let's say in summary, the same analysis you are doing on the lower time frame, apply it on the higher time frame. But the difference is this: you are not a swing trader. Okay, before that analysis will get to a particular POY. For example now, if you are looking for a sell, okay, if price should mitigate a bearish order block, immediately price mitigate a bearish order block, go to a lower time frame, 30 minutes or 1 hour, look for a market structure shift. After that market structure shift, look for an inducement, then look for a POY that is closer to that inducement and take your trade. Alright, then after you took that trade, if you want to catch a re-entry, let's say for example you missed the market structure shift, you want to catch a re-entry, go on the 30 minutes again, look for what? A double break of structure to that direction of the market that you're going with the trend. After that double break of structure, look for an inducement, then look for a POY that's closer to the inducement. Take your what? Entry and keep on riding the trend till market mitigate a weekly H4 or daily POY. Then before you can say, okay, oh, we are no longer in a bullish trend, we are not in what? A bullish trend, okay? I will just stop here. On our next video, I will explain more on structure. I will do liquidity and POY, okay? If you find this video insightful, make sure you like and comment, and make sure you subscribe and also share the video. Thank you.